Welcome to Lesson 9 of Week 13, focusing on audit readiness. This lesson covers how to maintain records and practices that will withstand audit scrutiny and how to respond if your grant is selected for review. Audits are a normal part of grant-funded research. Federal awards are subject to the Single Audit Act, which requires annual audits of organizations receiving significant federal funding. Individual grants may also be selected for specific review by program auditors, inspectors general, or other oversight bodies. The prospect of audit should not cause anxiety if you are managing your grant properly. Good management practices naturally produce audit-ready records. Auditors look for evidence that funds were used appropriately, that expenditures are documented and allowable, and that you complied with award terms. If you are doing these things, audit is just verification of what you already know. This lesson teaches you what auditors examine, how to maintain records that support your grant activities, common audit findings and how to avoid them, and how to respond appropriately if audit occurs. By the end, you will understand audit readiness as an outcome of good management, not a separate burden. Different types of audits serve different purposes and have different scopes. Understanding these types helps you prepare appropriately. Single audit is required annually for organizations receiving more than $750,000 in federal funds. This audit examines overall compliance with federal requirements and tests a sample of awards. Your grant might be selected as part of your organization's single audit even if there are no specific concerns about it. Program audit focuses on specific programs or awards. Funders may audit particular awards based on risk assessment, random selection, or specific concerns. Program audits look at how a specific grant was managed and whether funds were used appropriately. Inspector General audits involve investigation of potential fraud, waste, or mismanagement. IG audits are more serious and typically occur when problems are suspected. Cooperation is essential, but you should also ensure appropriate institutional involvement if IG contacts you directly. Internal audit is your organization's own review processes. Many institutions have internal audit functions that review grant management. Internal audits can identify problems before external auditors find them and help you correct issues proactively. Auditors examine various categories of records to verify appropriate grant management. Knowing what they look at helps you maintain proper documentation. Financial records include transaction documentation showing what was purchased, ledgers showing how expenditures were recorded, and reconciliations demonstrating that records are accurate and consistent. Auditors trace from reported expenditures to underlying documentation to verify accuracy. Personnel documentation covers effort certifications, time records, and payroll data. Since personnel costs are typically the largest grant expenditure, auditors pay particular attention to whether salary charges are supported by evidence of work performed. Effort certifications and time records demonstrate that personnel actually worked on the grant. Procurement records show how purchases were made. Auditors examine whether procurement followed required procedures, whether vendor selection was appropriate, and whether prices were reasonable. Sole source justifications, competitive bidding documentation, and conflict of interest disclosures may all be reviewed. Compliance evidence demonstrates adherence to requirements. Prior approvals show you obtained required authorization before acting. Submitted reports demonstrate you met reporting obligations. Policy acknowledgments show staff understood applicable rules. Record retention requirements specify how long you must keep grant documentation. Meeting these requirements ensures records are available when needed. The standard period for federal grants is generally 3 years after submission of the final financial report. During this time, all records supporting the grant should be retained and accessible. This includes financial records, personnel documentation, procurement files, and all other grant-related materials. Extended retention applies when audits, appeals, disputes, or litigation are pending. If any of these situations exist when the normal retention period would expire, you must retain records until all matters are resolved. Do not destroy records that might be needed for ongoing proceedings. Equipment records must be retained for the duration of equipment use. If you acquired equipment with grant funds and continue using it after the grant ends, maintain records documenting the equipment acquisition and use throughout its useful life. Equipment disposition also requires documentation. State requirements may exceed federal minimums. Your state or institution may impose longer retention periods. Always follow the longest applicable requirement. Check with your sponsored programs office to understand your specific retention obligations. Organizing records systematically supports both day-to-day management and audit response. Good organization makes audit less burdensome. Systematic filing uses consistent organization that enables efficient retrieval. Whether you use paper files, electronic systems, or both, establish a logical structure and use it consistently. Personnel files in one location, procurement in another, financial documents organized by budget category. When auditors request documents, you can find them quickly. Document completeness ensures all required elements are present for each transaction. A purchase should have request, approval, order, receipt, and payment documentation. A personnel action should have authorization, payroll records, and effort certification. Complete documentation answers auditor questions before they are asked. Cross-referencing links related documents and accounting entries. Transaction numbers, reference codes, and filing conventions should connect documents to each other and to accounting system entries. When auditors trace from financial statements to source documents, clear links enable verification. Access controls provide appropriate security while maintaining accessibility. Grant records may contain sensitive information requiring protection. At the same time, authorized personnel must be able to access records when needed, balance security and accessibility appropriately. Personnel costs receive significant audit attention because they represent substantial grant expenditures and are inherently complex to document. Effort certification provides after-the-fact confirmation of effort distribution. Certifications should be completed by individuals with first-hand knowledge of work performed. They should accurately reflect actual effort, not just budgeted or planned distributions. Inaccurate effort certification is a serious compliance violation. Time records document hours worked on specific projects for certain personnel. While faculty often certify effort rather than tracking hours, hourly employees typically must maintain time records. These records should be contemporaneous, showing time as it was worked rather than reconstructed later. Payroll records show salary and benefit charges to grant accounts. Auditors verify that charges match effort certifications and that calculations are correct. Fringe benefit rates applied should match approved rates. Personnel cost charges should be properly allocated based on actual effort. Institutional base salary documentation establishes the compensation basis for salary charges. Salary charges to grants should be calculated from IBS, and that IBS should be documented and reasonable. Auditors may verify that salary rates charged are consistent with institutional records. Procurement documentation demonstrates that purchases followed proper procedures and represent appropriate use of grant funds. Need justification explains why the purchase was necessary for the project. What project need does this item or service address? How does it support grant objectives? Documentation connecting purchases to project purposes demonstrates allowability. Method selection explains how the procurement method was chosen. Different dollar thresholds require different procurement methods. Documentation should show that you used appropriate procurement procedures for the purchase amount. If you used a method other than competitive bidding, you need justification. Vendor selection documents how the vendor was identified and selected. For competitive procurements, this includes solicitation documents, vendor responses, and evaluation documentation. For sole source purchases, this includes justification for why competition was not possible or practical. Price reasonableness shows that you paid a fair price. This might include competitive quotes, price comparisons, historical pricing, or other evidence that the amount paid was reasonable. Paying excessive prices wastes grant funds even if the purchase itself was appropriate. Cost allowability principles determine whether expenditures can legitimately be charged to grants. Auditors apply these principles to test whether costs should have been charged. Necessary and reasonable means the cost is required for the project and priced appropriately. A necessary cost serves a genuine project purpose. A reasonable cost is not excessive compared to what a prudent person would pay. Both elements must be satisfied for allowability. Allocable means the cost is properly charged to the specific grant that benefited. If an item serves multiple projects, costs should be allocated proportionally. Charging the full cost to one grant when multiple grants benefited is improper allocation. Costs must benefit the grant that bears them. Consistent treatment requires handling similar costs the same way. If you charge certain costs as direct on this grant, you should not charge similar costs as indirect on another grant. Inconsistent treatment raises questions about cost shifting and manipulation. Apply consistent methodologies. Permitted means the cost is not prohibited by law, regulation, or award terms. Even if a cost is necessary, reasonable, allocable, and consistently treated, it is unallowable if specifically prohibited. Common unallowable costs include alcohol, entertainment, and certain memberships. Know what is specifically prohibited. Understanding common audit findings helps you avoid the problems that auditors frequently identify. Inadequate documentation means records do not sufficiently support expenditures. Missing receipts, incomplete purchase orders, or insufficient justification all constitute documentation problems. When auditors cannot verify what happened from available records, findings result. Maintain complete documentation for every transaction. Unallowable costs are charges that violate allowability rules. Charging prohibited costs to grants, charging costs that are not allocable, or failing to demonstrate necessity and reasonableness results in findings that costs should be repaid. Know allowability rules and apply them before charging costs. Effort certification issues include inaccurate certifications that do not reflect actual effort and untimely certifications completed long after the fact. These findings are particularly serious because effort certification is a legal attestation. Ensuring accurate and timely certifications prevents these findings. Procurement violations involve failure to follow required procedures, not obtaining required competitive quotes, not documenting sole source justification, or not verifying price reasonableness are common procurement findings. Follow your institution's procurement procedures consistently. Preventing audit problems is easier than resolving them after the fact. These practices reduce audit risk. Know requirements by understanding applicable rules before acting. Do not charge costs, hoping they are allowable. Do not skip procurement steps, assuming they are not important. Learn the rules for your award and follow them. Ignorance is not a defense in audit. Document contemporaneously by creating records as events occur, not reconstructing them later. Write meeting notes at the meeting, not weeks afterward. Record time as you work, not at the end of the month. Contemporaneous documentation is more reliable and credible than after-the-fact reconstruction. Review transactions by checking that charges are appropriate before they post to grant accounts. Catch errors and mischarges early. Review monthly reports to verify that charges belong on your grant. It is easier to correct errors promptly than to explain them to auditors later. Ask questions when uncertain by seeking guidance from your sponsored programs office, grants accountant, or program officer. Do not guess about allowability or procedure. The people who support your grants can answer questions before problems occur. Asking questions prevents findings. When you receive notification that your grant will be audited, respond systematically to prepare for the review. Notify administration immediately when you learn of an audit. Your sponsored programs office and institutional leadership need to know. They have experience with audits and can provide guidance and support. Do not try to handle audit response alone. Understand scope by determining what the audit will cover. Is it a comprehensive review or focused on specific areas? What time periods are included? What types of documentation will be examined? Understanding scope helps you prepare appropriately without over-preparing for areas not under review. Designate contacts to identify who will interact with auditors. Typically, this includes someone from sponsored programs, potentially someone from the financial office, and you or someone from your project team. Clear contact designation prevents confusion about who speaks for the institution. Gather initial documents by beginning to assemble commonly requested records. Award documents, financial reports, major expenditure documentation, and personnel records are typically needed. Starting to gather materials before auditors arrive reduces scrambling once the audit begins. During the audit, your conduct affects both the process and outcome. Appropriate behavior supports positive resolution. Cooperate fully by providing requested information promptly and completely. Delays and incomplete responses extend audits and frustrate auditors. When documents are requested, provide them efficiently. When questions are asked, answer them directly. Cooperation demonstrates nothing is being hidden. Be professional by maintaining courteous and helpful demeanor throughout the process. Auditors are doing their jobs, not persecuting you. Treating them professionally creates a constructive working relationship. Hostility or defensiveness raises suspicions and makes the process harder for everyone. Answer accurately by responding truthfully to questions. If you do not know something, say so rather than guessing. If you need to verify information before responding, ask for time to do so. Inaccurate answers create problems. Accurate answers, even if unfavorable, enable resolution. Document interactions by keeping records of what was discussed and what documents were provided. These records help you track what auditors have reviewed and enable follow-up if questions arise. Your documentation of the audit process protects you if disputes emerge later. When auditors issue findings, respond thoughtfully rather than reactively. Careful response protects your interests and demonstrates responsibility. Review carefully to understand exactly what the finding claims. What specific problem is alleged? What evidence supports it? What remedy is proposed? Read findings closely so you understand what you are responding to. Assess validity to determine if the finding is accurate. Sometimes auditors make mistakes. Sometimes they lack context that would change their conclusions. Evaluate whether the finding is actually correct. If it is not, prepare to explain why. If it is, acknowledge that. Provide context because additional information may resolve concerns. Perhaps documentation exists that auditors did not see. Perhaps circumstances explain what appeared problematic. Providing additional context can sometimes resolve findings entirely or reduce their severity. Plan corrective action to address valid findings appropriately. If problems occurred, acknowledge them and describe how you will prevent recurrence. Demonstrate that you take findings seriously and will correct deficiencies. Responsible corrective action shows institutional commitment to compliance. Audits provide learning opportunities even when findings are uncomfortable. Use audit experience to improve your practices. Identify weaknesses revealed by findings. Even if you disagree with specific findings, audits often highlight areas where your processes could be stronger. Documentation might be adequate but not optimal. Procedures might be compliant but inefficient. Look for improvement opportunities beyond just fixing cited problems. Strengthen processes by updating procedures to prevent recurrence. If documentation was inadequate, improve your documentation practices. If procurement procedures were not followed, reinforce those procedures. Convert audit findings into process improvements that reduce future risk. Share lessons by communicating improvements to your project team. Others working on the grant should understand what auditors identified and how procedures are changing. Training on lessons learned helps everyone contribute to improved compliance. Monitor implementation to verify corrective actions are working. It is not enough to announce changes. You must ensure they are actually happening. Follow up to confirm that improved procedures are being followed and that similar problems are not recurring. Let us summarize the key points from this lesson on audit readiness. Audit readiness results from good management, not separate preparation. If you are managing your grant properly, creating complete documentation, following proper procedures, and maintaining accurate records, you are already audit ready. Audit readiness is not an extra task. It is a byproduct of doing things right. Essential practices include maintaining complete documentation for every transaction, following consistent procedures for personnel, procurement, and other activities, and creating records contemporaneously as events occur. These practices serve your management needs and simultaneously prepare you for any audit that might occur. During audit, cooperate fully with auditors, answer questions accurately, and maintain professional demeanor throughout. Respond thoughtfully to findings, providing additional context where helpful, and planning appropriate corrective action for valid concerns. Use audit experience to strengthen your practices going forward. In our next lesson, we cover grant closeout procedures. Closeout is the final phase of grant administration, wrapping up activities, submitting final reports, and properly concluding the award. Understanding closeout requirements ensures you end your grant as professionally as you managed it. Practice exercise. Review your current grant documentation practices. Identify any areas where records might not be complete or might not be easily retrievable. Develop a plan to address any gaps you identify. Consider conducting a self-audit of a sample of transactions.